What are the respected analysts talking about, on the street? And as we've talked about, we look at conflicting. We want to hear from both sides. So our positive outlooks, we have two major positive outlooks this week from JP Morgan and BlackRock. JP Morgan says they're more risk on approach. So they're focusing more on growth and on risk, increasing exposure to stocks and advising investors to overlook political noise. There's JP Morgan saying, don't listen to the noise. Keep investing. BlackRock entered the second half of 2025 with expectations for continued volatility, but a longer run outlook for strength in stocks, citing cross currents from geopolitical tensions and incoming economic data. So everything's colliding, but BlackRock is saying hold the course. On the other side of that, Goldman Sachs is expressing concern about the U.S. economy and financial markets, highlighting two primary risks: elevated investor optimism, that's interesting, and a surge in speculative trading. So investors taking a lot of risk and being overly optimistic, it could be a sign for a declining market coming, right? Merrill Lynch expects real gross domestic product growth to be below potential in 2025 at about 1.5% for the year after accounting for tariff effects. Fiscal stimulus is expected to offset some of the headwinds from tariffs supporting businesses and consumers, but they're expecting it to be below for the year. So we have JP Morgan and BlackRock with a growth outlook and Goldman Sachs, Merrill Lynch with a more negative outlook.